Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Andy Baehr, Head of Research and Index Product Development at CoinDesk, Zach Pandl, Head of Research at Grayscale, Vivek Raman, CEO of Etherealize, and Steven McClurg, Founder and CEO of Canary Capital. We're here to discuss why digital asset investors are looking for real utility, scalability, enterprise adoption, and further regulatory clarity. It is great to have everyone with us, full boat for what certainly are key topics dominating the financial media news cycle for sure. And Andy, part of that is, despite the headlines that we might see with Bitcoin, there's a bigger story or a deeper story when you look in the numbers more holistically.
There definitely is. What a great table to be at to talk about things. As we're 5 or 6 weeks away from the end of the year, we're wondering what kind of story 2025 is going to tell about crypto when people look in those leaderboards and league tables. This was supposed to be the year crypto got permission. And in fact, all of the progress that we'll talk about, all the slow money investment, all the regulatory and legislative progress that we've made hasn't amounted to a lot of performance, right? Bitcoin's down on the year, and CoinDesk 20 is down almost double digits on the year, and kind of sentiment is at max ebb right now. So with only 6 weeks left to go in the trading year, more or less, we really need to pull out of this to have the market recover. So we'll talk more about the high quality and low quality components of that later, but right now I think the market is looking for liquidity, for catalysts, and for a sentiment change.
Yeah, I mean, certainly when you think about the valuations on cryptos, and of course they look more attractive than they had, just a few weeks ago, about a month ago. The broader dynamics have really shifted, certainly more towards a market structure, institutional feel this year.
Yeah, that's right. I think Andy's point about sentiment is right if you look across the kind of crypto trader, crypto enthusiast community. But for people that are really in it for the long run, building technology, building businesses, working on regulation and the 10 and 20-year vision of these assets, I think things feel like they're moving in a very positive direction. So yes, it's been an up and down year for valuations. Bitcoin was at an all-time high something like 40 days ago and has pulled back significantly then. So the valuations are always up and down, but the kind of broader trends for the industry I feel great about going into next year, and I think a lot of people that are focused on that longer term vision feel the same.
Yeah, and Vivek, that fits with your thesis around that the Ethereum institutional cycle has really just begun.
I think it only started kicking off when the Genius Act was put into law, and that was only the first piece of law. But once crypto becomes entrenched in the regulatory framework, I think we're going to see an adoption supercycle. So I think the infrastructure is being laid this year. A lot of the seeds were planted this year for a long wave of institutional adoption. That's going to be secular. That's the start of a new trend. And so every conversation we've had is the most bullish it's been in terms of people adopting tokenization strategies, people adopting stablecoin strategies, people starting to use blockchain tech into their day-to-day operations. So I think we're just at the very beginning.
Yeah, and Steve, that goes back to the narrative around we're seeing utility. There is scalability, and that just begets more traction.
Yeah, absolutely. And if you look at things like XRP, Ledger, and Hedera, those two networks have a lot of utility. Hedera more on the enterprise side where it's data. It's not even really a blockchain. It's a bunch of nodes holding data where you can grab quickly, which is great for enterprise solutions. So that's one of the reasons why that particular chain and token have done quite well. Same thing with XRP. The XRP Ledger is now moving its own stablecoin. Ripple, which is very involved with the XRP Ledger, has been buying up companies and building a business to all focus around that XRP Ledger.
Yeah, and Vivek, that's something that you and I covered most recently at the SmartCon conference, where the conversation was really around, we get the efficiencies, where's the utility, where we're extracting value, talking about governance on the chain, security on the chain. That's an indication to me that it's certainly maturing.
It's maturing, and the part that people get wrong is blockchains aren't technology, they're financial infrastructure, and so you can't move fast and break things in blockchain. You need a lot of precedent set, you need a lot of clarity, specifically around regulation. We're getting all of that this year. I mean, with the stablecoin bill and then hopefully the Clarity Act following it shortly after, every financial institution will have a green light to go deploy assets onto public blockchains. Once we have that, then we're going to see the real potential. And so we're at less than 1% of where the potential of assets being on chain and firms being on chain even could be. And so all that's going to start hitting next year.
Yeah, so really it seems, the next catalyst is the market structure bill. right? I mean, market structure, market structure, market structure. That's really what the industry's focused on.
I think that that's right from a kind of crypto-specific standpoint, and this key theme of regulatory clarity driving institutional investment in the asset class. The nuance that I would add is, and we've talked about this many times, Jill, from my perspective, crypto is a macro asset class. Bitcoin and Ethereum are macro assets, and they're being driven by big macroeconomic trends: debt, deficits, risks of inflation, easier monetary policy, and that's been a big story behind the drawdown recently. More hawkish Fed going into the December FOMC meeting. I think we're going to get back to these macro stories in 2026. New Fed chair, more easing, probably an economy that continues to have reasonably high inflation. So to me, it's these two stories: macro demand for alternative stores of value, scarce digital commodities, plus regulatory clarity from legislators driving institutional investment. To me, these are the two big pillars of the bull market.
Yeah, and Andy, we've seen these patterns emerge before.
Yeah, it's such fantastic points about the macro side, about price drivers, actually the business case and the adoption side of the technology, and the fact that that blockchains are financial technology. It's extremely well put. We haven't seen the conversion of that adoption into prices consistently in a way that you would with other growth assets. It's been more of a macro story and a sentiment story, and we kind of have to crawl out of that. One way where we've seen a little bit of improvement is the pull away of higher quality crypto names. Now, I know quality is a well-studied and well-discussed equity factor or traditional asset class factor. So we're not talking about capital Q quality, but bigger names that are more established have tended to pull away. So one of the things we measured was we took our CoinDesk 20 index, our sort of broad-based flagship, and measured it against the CoinDesk 80, which is a mid-cap index. So the CoinDesk 80 in CoinDesk 20 terms, the ratio of those has very smoothly lost about 40–50% on the year in a very kind of smooth way. So a lot of the smaller tokens that came up in years past but really aren't going to convert into changing the way we do things are starting to drift away, which allows the market to focus on still a broad-based asset class, but names that really actually have a chance of becoming growth names that you can hitch your wagon to. So we're encouraged a little bit about that. Similar story with meme coins, which are, of course, interesting and fascinating, captivating trading instruments, but not kind of long-term investment class type assets. We see that kind of similar kind of drift away. So we're starting to see a little bit of health and maturity in the market over trend periods. It's just as Zach has pointed out and we're observing, right now we're just in this sentiment lull that we haven't really broken the fever yet.
Yeah, is the Bitcoin whale selling narrative perhaps overblown then?
Well, I think it's been a very steady thing, and I would say short term it is overblown. Since the Bitcoin ETFs, ETPs came to market in January 2024, there has been a change in the capital structure and the ownership structure of Bitcoin, with some transition from these very long-term holders who have been in Bitcoin from very low prices, transitioning to millions of new owners. And I actually think that is quite healthy for Bitcoin's sustainability and adoption over the longer run as a broader, diverse ownership base. It is the case when price goes down, people look for explanations, and that's been a popular explanation. But really that trend, Bitcoin whale selling, transition of that ownership to ETF owners has been happening since January of 2024, since the ETFs launched, essentially.
Yeah, and I would imagine, Steve, that's not going to hinder product development either.
No, not at all. And on the theme of Bitcoin and why that price has been down, there's really been three factors. One of them has been old wallets, whales that are selling. I know several people that bought Bitcoin at $1 and said, well, when it hits 100,000, I'm out, some wild number. Well, we're there and they're selling. The other thing to keep in mind is the basis trade, which has been extremely important in the ETFs for Bitcoin, and that's been unwinding because the basis trade has collapsed. And now they're moving into things like XRP, Solana, Hedera are some of the areas where there's ETFs and there's really good basis trades. And then the final thing is miners. Miners are whales, and there's a big debate over the 4-year cycle right now. And that 4-year cycle really is the miners beginning to sell to pay their bills. And what's happened this last year that's made that cycle be a little bit off is that miners have had to sell early due to AI causing energy prices to go up for data centers. So that means that the small to medium sized Bitcoin miners have to sell earlier than they have in previous cycles in order to actually pay their bills and pay their energy bills. So those are things that have really been contributing to Bitcoin declining. But other products that we've been working on have actually done quite well, even though they may not have gone up in price. They've held steady.
Yeah, well,
That's a really important point, and it just brings together a giant theme over the last 12 to 18 months that many people's first foray into digital assets, particularly aided by the ETFs, has been to get into Bitcoin first and then sort of add from there, complete the set, the chessboard from there. Now more and more Bitcoin only, or having a market cap size position in Bitcoin, is more of an active stance, right? Because you are betting on miner activity, you're betting on electricity prices, you're betting on cycle, you're betting on macro, much more than growth assets, much more than ETH, and much more than XRP, much more than Hedera, which have growth prospects, which are really building. Bitcoin is still just moving itself from one address to the other, and being a store of value and being, having an independent investment case. But it is way more independent than it has been, especially with the availability of new products. So investors really start to, they need to look broader to really capture this innovation stage.
I would also argue that broadening out is a healthy sign for the space. Investors are starting to understand the fundamentals, again, borrowing a TradFi word, but understanding the fundamentals and the different use cases of, the different types of digital assets that are available.
I think it's not only healthy, but it's exciting for us to move past just digital gold as a store of value to the underlying blockchain technology. Once we move past just single asset to digital infrastructure that's going to power a lot of the global economy, that's where the real innovation is going to happen. And so we're moving past store of value to the blockchain era. We see the most amount of activity in the blockchain era institutionally on Ethereum. And you're seeing, if you look at the data points, just recapping the year, Robinhood started to tokenize their own stocks on Ethereum on their own layer 2. Coinbase's layer 2 is one of the best consumer adoption vectors for all of blockchains. You're even seeing Swift start to do experiments on another L2 called Linea on top of Ethereum. So you're starting to see the real use cases start to emerge. And so once people see more and more activity all coalesce around the blockchain ecosystem, they're going to start looking at other stores of value, and we think ETH's positioned really well for 2026 for that, to capture that.
I mean, you're almost going to have to get on board with this. Think about liquidity. Think about just the mechanics of trading.
Yeah, well, in terms of investors as well, you have to get on board in a sense that it's a major asset class at this point, a mid-sized part of the alternatives category, $4 trillion asset class, too big to ignore, frankly, for most investors. And you are making an active bet, and that's okay. If someone wants to make an active bet that they don't want to allocate to crypto, that's perfectly okay. But I think every investor that we talk to today, financial advisors, institutional advisors, they recognize that it's no longer acceptable to not have done your homework on crypto, not to consider it in your portfolio. And it is kind of a question on how big, whether you're supposed to be allocated to Bitcoin. This is where the conversation is not, not that crypto is not for me. Everyone is taking a very careful look from the investors that we speak to.
Yeah, I mean, also the demand for alternative investments is helping as well.
Well, I think that's a huge part of it. It's hard to build a diversified portfolio today. You look back the last 15 years, large cap U.S. equities were kind of the only game in town, and traditional assets, other asset classes didn't produce compelling returns. And now valuations for those assets are high, and there are macro questions. And so investors are dealing with exactly this. How do I make diversified bets across a lot of different asset classes for a complex macro picture? And I strongly believe this is the message that we give Grayscale's investors, is that the crypto asset class is part of the solution to that problem. I think that's how many of our investors are looking at the crypto question.
Yeah. What other types of products can you see emerging here, Steve?
Well, I think anything in the term of protocol is going to be really interesting. Some of the faster protocols, I'm thinking things like SWI, SEI, Injective, are next generation protocols that are going to do quite well. Privacy tokens are super interesting right now. I know Grayscale has a Zcash product, which is really interesting. It's really been taken off. Litecoin has a privacy feature that is very similar to Zcash, where you can make your wallet private. And what we're noticing, almost in conjunction with global buying of gold, is global buying of privacy coins. People are afraid of the global macroeconomic environment, and these are the two things that they're loading up on.
Yeah. Are you seeing that within the index activity, where there's that breakout?
Definitely, for sure. We've seen a lot of different names and stories pop up. Sometimes we'll look at our leaderboard of CoinDesk 20, and even if you see 19 names going one way, you'll see one name going the other way. And those have rotated. That's been exciting. Even in the Grayscale product, GDLC, with the CoinDesk 5, there have been pulses of each of these names contributing to performance, which is exactly what you want from diversification. So even at this table where you just go deeper into Ethereum, go into Litecoin or HBAR or XRP, go into an index product like CoinDesk 5, you're immediately starting to kind of break the bonds of Bitcoin only and starting to release yourself from some of that kind of macro contained investment thesis and starting to participate in some of these growth stories.
Yeah.
I would love to add, yeah, that's exactly where the conversation is with our investors, getting more sophisticated. It starts with Bitcoin, then Ethereum, and then so many other things, privacy, faster blockchains. I would add things like Chainlink, very topical for our investors today, a kind of critical infrastructure provider for tokenization, for decentralized finance. Almost impossible to imagine those use cases taking off without Chainlink playing a huge role. So exactly these types of conversations are where we're at with our investors.
Yeah, and interoperability, such as Axelar, which is probably one that nobody's heard of, but they're building interoperability across many chains right now.
Yeah, it seems to be interoperability, security, governance were the key themes I saw emerge this year for sure.
And privacy, just reiterating on how important it is for public blockchains to have compliant regulatory privacy within the regulatory frameworks. That's being innovated right now. We're building infrastructure and tools to have tokenized assets be able to trade publicly and privately, and that's table stakes for institutions. So all of that is coming right now. All of those seeds were planted this year, and we're going to see them come to fruition next year.
I mean, especially when you see the continued adoption and integration, those sort of applications need to exist.
They absolutely need to exist. The whole point of blockchains is to make the financial system better. So if we can't at least do what banks and asset managers can already do and then digitize all of it, then what are we doing here? But all of those tools are finally reaching maturity, having some clarity, and that's what we're excited about.
Yeah, I mean, back to your point you were saying before when you start hearing SWIFT, DTTC, like the plumbing of TradFi markets and digitizing their applications, I think the writing's on the wall.
Absolutely it is. And look, it's very hard to predict. I do it for a living, try to predict what's happening in markets over the short term, but of course it's very difficult. I mean, but I look longer ahead, 5, 10, 20 years into the future, it does feel like it's an quite obvious thesis to me, and an obvious way to be spending my time and my capital is on this mega trend, which is blockchains taking over mainstream finance. We're at the very beginning of that story, as everyone has pointed out. I think it's going to be an incredible journey to talk about it with all of you over these coming years.
Yeah. I mean, Eddie, it's like anything else. You have to separate the noise, right?
You do. I'm almost wondering if most of the retail activity with crypto has been trading, the fun part, like that's been there. Whereas with AI, it's been a novelty like ChatGPT, where they've interacted, got a taste of the technology, they get a mental model, and they say, oh, this is going to be big, right? I think we need a lot of these solutions, semi-privacy or institutional adoption in the financial world is a slow process. It's not always the most exciting. Like DTCC is really necessary, but it's,
Exactly.
it has its place, right? But they're big, they're massive, they're critical parts of, of the brick and mortar system. So to the extent that they get replaced and upgraded, it's going to be huge. But that message doesn't always have a novelty side that reaches down to individual investors. So the patience, people who are licking their wounds with their portfolios right now just have to, look out at the horizon, imagine what things are going to be like in the future, and you just can't reverse the kind of progress that's inevitable here.
Well, it's like generative AI. You could play around with it, right? From your day-to-day life, you can experience the efficiencies. I think part of this whole thing is to have the user experience where it's ubiquitous and you're not thinking about it. Like when you get your direct deposit, Steve, you get it. Like you don't even think twice how the mechanics work. And I guess in theory, the end user doesn't want to have as much exposure as they do with Gen AI, because the whole point of this is to create that utility and ubiquity.
Yeah, absolutely. And I mean, I even started using AI, and I'm an old dog, trying to learn new tricks here. But I mean, I actually used it to put to create a picture of myself, and I use it all the time to look things up. Sometimes it gives me knowledge that that just a regular Google search doesn't. I use it in my emails, responding to people in a kinder way, because usually I'm just like, yes, no, without saying please and thank you. And AI puts those things in there for me. It's fantastic.
Yeah. I think you're going to, to wrap up here, Vivek, if we can get your outlook as well. I think, once it comes down to UX, ubiquity, utility, you're not even thinking about like stablecoins, right? I'm surprised that market actually isn't bigger than it is.
That's the thing, we're at such a tip of the iceberg. There's $180 billion of stablecoins on Ethereum. That should be 10x or 100x. But coming back to it, Ethereum will be an invisible backbone, an invisible infrastructure that powers the entire economy. So the end user shouldn't know they're using a blockchain, but their experience should be so much better, so much more digital, that that's the way the financial system should be. That's where we see it going. And once they see that Ethereum powers so much of the ecosystem, then we're going to see ETH price really rally and just become global infrastructure.
Yeah. All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.